Oh, welcome back. It's time for the Executive Edge, and it's also this time of the season to watch the 13F filings, or whale watching, as it's sometimes colloquially called. Leslie Picker is here now with some of the investing trends of the biggest names on Wall Street.
Hey, Kelly, that's right. The most recent 13Fs show how fund managers traded the fourth quarter volatility. It's clear that some of our well-known hedge funds soured on two industries in particular, FANGs and financials. Corvex selling some of its Facebook, Duquesne paring back Amazon, Third Point dissolving Netflix, and Omega cutting Alphabet. Even Warren Buffett's Berkshire Hathaway, which has been building a massive position in Apple, sold some of its stake in the quarter. Tiger Global dissolved 1 million shares of Apple, with David Tepper and George Soros selling out of their stakes completely. Financials, too, really turned out of favor in the fourth quarter. Corvex, Duquesne, and Omega each selling shares in large banks like Bank of America and Citi. Berkshire Hathaway sold some of Wells Fargo, but then actually added to its positions in JP Morgan and Bank of America, as well as PNC Financial, US Bancorp, and Bank of New York Mellon. Now, it's important to note, guys, that these positions are as of December 31st and may have changed in the 6 weeks since, but at least gives us a little snapshot of what they were doing in the fourth quarter.
What do you think the takeaway is, especially given how bad the fourth quarter was in the markets? What are you gleaning from these filings?
I think the takeaway is that it's a risk-off environment for hedge funds, and based on people I've spoken with that trade with hedge funds, that risk-off attitude has continued in the 6 weeks since, despite the fact that the market's gone up, despite the fact that people are, maybe feeling a bit more bullish.
Does that mean they're missing out on the rally?
It is. Hedge funds have taken off leverage ever since the fourth quarter. They've also, looked at places that they can find a little bit more stability. And I think the big issue for them is just really this idea of all the headline risk out there. They didn't know what was going on with the shutdown.
But Ackman's done pretty good.
Ackman's up 25%.
Yeah. I mean, is it just he bets on Chipotle, every other strategy, throw it out the window?
I mean, if you're long and leveraged to the market, this is a good market to be long and leveraged.